Hello everyone, welcome to my technical analysis stock market channel. We're going to get right into the charts. I'm seeing some really interesting things. I want to point them out and I want to get this video out while the market's open. I think that's important. One of the risks, I suppose, with putting videos out while the market's open is the read that I'm getting right now could change in the next 10 minutes or whatever. But I think it's also important to understand the potential setup and what might happen in case it actually does and you can take action. So I want to get this out, show everyone. And here's what I'm looking at. Look, the Qs, look at this chart here. This is a daily chart of the Qs, the technology sector. And look at these candles that we've been walking up. You know, basically a lot of the price action that I've seen happening in the last 4 days, most of the moves up are taking place in the overnight in the futures market, and during the day, the market's kind of grinding sideways. It's not really going down. It's not really going up. I would put a slight upward bias to it, but for the most part, just pretty sideways. And the thing is that I want to point out, this is another thing that I'm really looking at. Look, if I get rid of this green line right here. I know I got lines. Don't pay attention to all the lines down here. These are just possible support lines as we fall down. I just want to keep them there so I can watch those if we start to reverse. But I'm looking for a reversal right here. I think this is the area. Now I said that in the previous videos, you know, there's this big gap right here, and if I go to the hourly chart, I can point that gap out a little clearer. See the gap right here? 224 basically up to 229. Everybody sees that gap. I've seen it in a lot of comments across YouTube. Basically everybody's eyeballing this gap. All right, so right now, given the trend, the market thinks this is going to fill, and it might, you know. And so here's the two scenarios that I see happening. One, we fill the gap while simultaneously back testing this upward trend line right here. This is going all the way back to the lows in March, and we were walking this trend line. We broke the trend right here, and then this is just a back test. So if we do a full gap fill, it pretty much falls perfect. It falls in place right there, as long as we do it pretty soon, you know, relatively soon, today or Monday possibly. We could even overshoot it slightly. So that would fill the gap, and that would do a perfect back test. I've been anticipating that we're not going to fill the gap. And again, I don't have anything to back it up except for just a basic read on the market and what I think actually is going to happen, of, you know, how this is going to trap the bulls to the long side. The bulls are looking for the gap fill. Everybody's looking for the gap fill for the most part. And I just don't think we fill it. Now, here's one of the reasons why it just seems really suspect to me, what's happening. If I go to the daily, all right, here's the gap. Look at the volume on this breakout. We're breaking into the gap. This is a level of resistance right here, this gap entry that we're starting to break above, and there's absolutely no volume on this breakout. This is, to me, a screaming tell that this breakout is we're gonna fail right here. I could be wrong. Maybe the volume's gonna come at the end of the day or come on Monday or Tuesday next week, but it's very interesting that we broke above this resistance of 224. You know, it's about 224.20 or something like that. We broke above it, and nobody rushed in to buy it. Nobody rushed in for a gap fill trade. And that's the other thing, is that you know, if you're a day trader, you know about gaps and everything. I mean, day traders trade gaps all the time. So gap entry is your entry, and gap fill would be your exit, and that would be your day trade. And we're just not seeing the day traders. We're seeing nobody rush in and bid this thing up. Well, if this thing was bidding up and running up to gap fill, to me that would seem a lot more bullish. But because we're just grinding right here, and we're just not, you know, we're not moving higher impulsively. Yes, we are moving higher, but it's just this grind. I mean, look at this action. We popped above it, and we're grinding sideways. And the other thing is, look at when we started to pop above it. This, New York time, a lot of traders don't trade during, kind of lunchtime in New York. That's when a lot of the institutional traders, the big money guys, are either at lunch and not really watching the market. And then, so there's just not a lot of, there's less volume. It's not as liquid. So you can get these kind of fake moves. And look, right here at, basically 11:30, 15:30 is 11:30 New York time. That's when we started to break out. And this whole move is really just during the lunch hour. So what is the second half of the day? They call that the second session, basically. What's the second half of the day? What does that bring? Does that bring impulsive selling? If it does, that's most likely institutional selling coming in. And you always want to be on the side of the institutions. You want to be on the side where the big money's at. They have the power to move the market. So when they're not trading, if they're not participating in a move and you're maybe grinding higher on low volume, a lot of times that's just kind of passive flows, passive ETFs, retail flow, things like that. You want to be on the side of the major institutions. So you just want to make sure. That's why when I look at breakouts on the daily, I look for volume. I'm looking for institutional participation. If I see a breakout and I see the volume come in, that tells me that breakout has some, firepower behind it because the institutions are participating in that breakout. They believe markets are going higher as well. This tells me that institutions do not believe that markets are going higher, although they might, but I'm just not seeing the volume and I'm not seeing that impulsive breakout. We're just kind of limping above this resistance. So to me, this looks like a stop raid. Looks like we're running some stops, and I think we're going to get impulsive selling into the close today, possibly Monday. I don't know when. Timing's always difficult. This can chop around a little bit sideways, but I think it's close. That's all I have to say about that. When calling a possible trend reversal, it's really hard to say, oh, it's going to happen right now or it's going to happen today. It's better just to understand that when I'm trying to anticipate a move, I'm saying, okay, we're in an area. It could happen in this area, and time is kind of irrelevant. I just don't think we're going much higher. So we could go sideways. I just don't think we're going to go much higher in price. So that's what I see on that, on the Qs. Here's the SPY. Same kind of thing. If you look at the SPY, now the SPY's not really breaking out. The SPY's been lagging the Qs. The Qs basically is all the way up here, filling this, at gap entry right here. SPY's way down here. So if SPY wants to play a game of catch up, maybe that pumps the Qs to all-time new highs. I think that would be the case. If SPY starts to rally more and play a game of catch up on what looks like a V bottom, then Qs will probably break to all-time new highs. But what I think is actually happening is I think Qs is kind of done with its rally move. This is not a V bottom. It just looks like one. And that's the thing is bear market rallies, a lot of the time, they'll look like a V bottom. They're impulsive. They look like a V bottom, but in reality, it's just this is the end of the rally, and now we're going to start to sell off. Again, I could be wrong. I've been saying this for a while, all through here. I basically have been saying, okay, I think we're in a bear market rally, and I think that this is, we're close to the top. But the reality is that I was also saying the same stuff right up in here, okay? If you look, I was saying, okay, I think this is close, or, I'm looking for a sell signal. And, basically the video that I put out was calling the top was right in this area, right in here. Does that mean I'm wrong that the market, if I was saying we're at the top of a market right here and the market goes up another 3%, does that mean I'm wrong? Well, yeah, temporarily for 3% I'm wrong, but then I was right for 30%. So, that's kind of how you have to trade. It's all in a range and a zone. So I think we're in the area here where this is the kind of the end of this bear market rally. And I think, we could go a little higher. Like I said, we could do this back test, but I just don't think we're going much higher. I don't think we're going to make all-time new highs. And I think we're going to roll over. I'm not seeing institutional participation on a breakout in the Qs. So that's a tell to me. I want to get this video out. This is really all I want to cover in the video. So, oh, and then XLF, you know, you look at this. I mean, XLF's not really participating, just kind of sideways. XLV's just kind of sideways. This rally is just based on tech, you know, and it's just like 5 names pretty much. So, and when I see tech continuing to grind higher, but with no participation, no volume on a breakout, all right? People always say, hey, we can rally on low volume. We've done it for the last 10 years. I agree. I'm not saying we can't rally on low volume, and we can move up on low volume. That's not suspicious to me. What's suspicious is that there's low volume on a breakout of a level. This is a major level right here. This is a clean major level that everybody sees, and you would there should be some volume here if it's, you know, if there's continuation and you're just not seeing it. That's what is suspicious to me. It's the low volume on a breakout level, a major breakout, and that is what I think is worthy of doing. And then you can see we're starting to fade. So whether this sticks, I don't know, but we'll see if this builds some steam. Couple trades, you know, so I took a small position in TVIX on this move because I feel like we're close to the top. Volatility should spike. You know, whenever you have that inflection point, you have a major reversal. If we're at that inflection point, usually you're going to get that first thrust down will be impulsive, and that's when I like to be in TVIX, is anticipating that first impulsive move. And I close my position in TVIX usually after that first impulsive move, and then you know, I can just ride out my short positions for a trend trade. So, all right, here's the video. I'm going to get it out. Give me a thumbs up. Let me know what you guys think. Bye.